All right, let's jump into it. It is late. It is 11:54 p.m. on Sunday, so that's the 12th of April. So yeah, look, it's a bit of an interesting sort of time at the moment. Obviously, every week, every couple of days, is everything sort of changing, flipping back and forth, and the whole sort of ceasefire thing is the hot topic at the moment, and we're really sort of trying to sort of see how mainly, obviously, we're starting on gold here. How we're going to sort of see is gold going to react with a positive outcome and obviously with a negative outcome. Negative, obviously, sort of being like a little bit more of a sort of prolonged wait and sort of breakdown of talks, these kind of things. Now, this is on the daily here, but if we go back just a quick scratch, where we at here? So I'm still on very much reduced duties here, trying to mouse with my left hand, and yeah, got a whole series of things going on anyway. So it's going to be a quick little look over the charts anyway. But look, what we can sort of see here is obviously sort of like gold sort of moving back through these periods here. So let me see if I can just do anything quick. Oh, maybe do this. Let's get rid of some of this stuff. So clean it up a bit. Yep, cool, great, whatever. Get rid of you. Get rid of you. Get rid of you. All right. So if we go back a little bit, these sort of points back here, this is not necessarily this week, but the week prior in that. Of course, we had these big sort of like, Trump headlines where he was like, hey, US is going to be pulling out soon, job's pretty much done. And we saw how the market, and that gave us a bit of a preview as to sort of how the market, in this case with gold, but obviously with, equities, US dollar, Aussie dollar, these kind of things. We saw how things were going to react on that kind of positive news. And, we saw that it sounded positive, market moved up, and then realized, hold on, wait, it's not too much. Arms a bit sore here. Not too much to that. And then they sort of sold into it because nothing substantial, I should probably sort of say. And that happened a few times over. Okay, that was back a week and a bit ago in that. What we've sort of seen this week is obviously the ceasefire was announced. We got this big push up through the top over here. And I actually played this very well because I had Aussie longs and I had sort of gold long, and I was sort of gold long all through this period here. But this big jump up here, and I was sort of saying at the time that sort of it was a bit of sort of like an emotional, euphoric, oh yeah, bang bang, yeah, so that's great kind of move. Nothing substantially had changed, and this is what I think is important, sort of when not necessarily trading headlines, but reacting off whether I should buy, hold, close, whatever you want to do. If you're going to action something off a headline, you have to know sort of like, is this something of full substance? And is it going to sort of hold? And, as obviously we sort of saw, it spiked up very nice, got up over sort of like 48 here, and then it just got sort of sold back into. So where we at? This was sort of on the 8th or so, around the Wednesday period there. So, it sort of really didn't last. It's on the 4 hour now. It really only lasted a couple of hours up the top over here, unable to sort of continue through with it at all. And then all of a sudden, bang, we're coming back down to the downside over here now. And yes, it's kind of sort of petered the week out fairly flat, but we are sort of seeing at the most recent sort of like update of headlines that the talks have sort of stalled at the moment. So going back to what we had sort of seen previously, we know that any sort of positive gold news, well, sorry, any sort of positive war news was going to be positive for gold. We saw it this week when they said, hey, 2 week ceasefire, boom, they moved up. Oh, hold on, wait, there's conditions. And, there's 10 conditions from the Iranians, there's 15 conditions from the US, and now they're having talks. And that doesn't seem to have sort of actually pushed through at all at the moment. So we are probably looking at this stage to have a bit of a gap down on Monday. I mean, the talks haven't fully broken down, so otherwise you'd be sort of back down over here. You'd have a big gap down. But the fact that sort of like, we haven't seen any sort of progression in this sort of like uh, cooling of the cooling of the sort of war situation. That's I find it hard to sort of speak in a little bit at the moment. Maybe it's the medication. But we are sort of seeing that, obviously without the positive news to sort of push it higher, we're going to see a little bit of a pushback down here. So it does seem to be the theme of what we can expect sort of come Monday. That would be pretty much a risk off and gold acting as kind of technically a risk on asset at the moment because is as we sort of see, no progression in the war, sort of war talks, ceasefire. Well, that's obviously going to be sort of a bit more of a risk off kind of feel to it. I mean, you could just tell that. Excuse me. And if gold's going to be sort of moving negative on that, well, obviously gold is moving with a risk on, i.e., de-escalation, gold goes up, none of that, gold comes back down. Okay, that's fine. So we can ascertain kind of the position that we're expecting it to sort of maybe run from. Now, I did have a sort of bit of a channel sort of running through here. And I think this is important because if we drag this up here, we can see that it was a bit of a channel. And of course, with channels, like with ranges, the first break away from continuation of it, so had we sort of get up to 49 and then pull back, would still be legitimate more. But as we have seen it now, we're starting to sort of pull back. This is actually a previous low from going back way over here. It's not a major level. Did sort of try to hold it a little bit on the way down there around that sort of 48.30 period. So let's drag you across a little bit here. That is a bit of a top side to pay attention to should we break above it. But as I said, at the moment, we're probably looking around 4,700 or so for our gap down. So if we come in around 4,700, this could potentially be sort of taking us out of this little recovery channel that has been sort of respecting for the most part over here. Why that's important is because really, of course, remember, this is just a big sort of sell down and then grind up, which could lead to a bit more of a bear flagish. Now, I don't think the whole bear flag thing necessarily will play out. I did sort of map it out last week. It was around 3,900 or so. Though, should we break here, remember, your price will respect the channel. That's fine. You can use it every time it hits it, it bounces, so on and so on. Should we break it, and then of course the swing low in this situation because we're moving to the downside, price most likely will be punished for that. Should we get some alternating headline where, hey, look, they've struck a deal, that blows technicals out of the water. It doesn't matter. Like, you could be coming down here and then, hey, you know what, we've got a ceasefire. Boom, and it could be moving back up over here. So it means that the approach towards the trades are very much still lock in where you can. But should we get a break for this channel, then on a technical level, we're sort of coming down. Should we see no progression in sort of a ceasefire sort of resolution, that's fundamental sort of coming down. And then we can start to map out the levels of where we could expect the buyers to be popping back in. So maybe down over here, we could have another sort of little bit of a zone coming through. This is really just a bit of chop along through here. There's probably lower zones, lower lower little sort of support zones and that you could be sort of working off down under here, but otherwise you'd be dragging down back over here. So they're kind of like, if we don't see a change in the ceasefire talk, they're the three kind of levels that I'm probably almost sort of looking at through this week. Now, it's important as well to sort of note that we did have CPI on Friday as well, and CPI actually came down. So CPI, US dollar and gold running inversely. So you would have expected with a weaker lower CPI that you would have less reason to hike and hold rates higher just based on that pure inflation side of things. It's moving in the right direction. So they're not gonna hike. They probably don't even need to they probably do need to hold because it's still a little bit above target, but it's moving in the right direction. So there's definitely no hike on the table and that. Not that they were necessarily looking at that kind of thing, but certainly it's more towards a hold cut kind of stuff, which of course is a little bit sort of weaker for the US dollar. Now, if the US dollar represents the sort of the risk off and gold being the inverse to that risk on, well, you would have expected gold to appreciate. I mean, that's technically how it should have worked if all things working correctly, or sort of as they sort of flow together. As I said, I work off a 90-10 rule. 90% of the time they'll run inverse, 10% of the time they'll run together. And when one's not acting as it should, remember when we were up over here, and I was saying that these levels here, remember, it's sort of like, the dollar was selling off and gold wasn't appreciating. I said gold should be back up here because that was equal to where sort of the dollar had been through its week. Well, look at the outcome afterwards. Boom. And to a certain degree, This is what we had here. Though the market didn't really sell the dollar off, even though they're sort of, that bit of data. CPI, remember, is a second tier bit of data. It's kind of equal impact wise for, as say, NFP, and it can really, it could sort of set a trend for, a month or so, and only just behind the actual rate decision. Yet, even with that bit of data there, the market still didn't sell off further than the sort of knee-jerk reaction that US dollar. And they certainly didn't see the flow come out of the US dollar into gold. Because remember, like, gold will appreciate as the US dollar becomes less attractive for lower yields, and you'll have lower yields when the inflation is a little bit, so like they don't need to have the rate so high, so they don't need to have a high yield for it all. So in that whole sort of respect of it all, you should have seen the dollar continue and hold moving down and gold appreciate. It didn't happen. And you got to think, okay, why is that? Well, obviously because the ceasefire is the main sort of topic at the moment, and that's what the market's looking at for actual true direction. And that's why I sort of think that, like, till we get a headline that says, hey, yep, it's all good, you'll see gold bounce up very strong. But should we break it on a technical level, plus there's the sort of fundamental sort of things coming and saying, hey, look, we sort of haven't really sort of come to any resolution yet. I mean, one of the headlines I saw before was Iran saying, hey, we're in no rush. The ball's in America's court. Like they think they have a real sort of chance, but whatever. The point is, we're looking at the markets, we're looking how the flows of the capital are actually sort of reacting based off the information that's presented to us. So the fact that the dollar didn't sell off, the fact that gold didn't go up high, even though we've had that CPI data, means that there's a bigger driver being the ceasefire. Ceasefire, as we know at the moment, is not going ahead. Well, that leads to gold downside. And these are the three levels that I'll be looking at sort of through the week. Sort of 47 around for the open, 45.82 to 45.50. I think if we do get underneath here, this will be a nice little trade. Should we sort of break through this zone over here, and we'll be sort of coming back down, testing around that 4,400 level. I do expect to see some buyers pop back in. Should we sort of see this thing happen? But in saying that, that's still a decent kind of sort of trade, and certainly, we're talking $300-400 from where we are right now. So unless we get some sort of pushback on the news and some progression on that sort of ceasefire stuff, I'd definitely be looking for the downside on gold there. Have a look at silver. Silver, obviously, look, it had this little sort of bit of a channel. I thought it was going to break through and do this. No, didn't. Bang, hold. That's fine. Look, it's doing its thing. It'll follow suit with gold. Big thing for sort of to be watching for is a breakdown underneath here. If we get down underneath 70 again, I'm sorry, but I think that's goodbye time in that for silver. You got these little chop zones over here, but they've been exhausted a couple of times. Buyers will come in, buyers will come in, buyers come in, buyers come in. They're progressing. Should you get down over here again, I would imagine that you probably got a lot of stops that are sitting underneath these levels over here. So underneath 69, I wouldn't want to be sort of long silver. I mean, of course, that's still $5-6, but that's not necessarily saying much in the scheme of things for how silver has been moving a lot recently. So, I would still be looking downside here. My main focus is on gold at the moment, but I think that certainly silver will be following suit with that. I'll be watching for a sort of a break underneath sort of 73.50, but certainly underneath 70. That'd be a nice trade, and this could be the time that we actually get down, clip these levels down over here if this carries on with no progression. Quickly fly through these ones. We've got the dollar. Dollar, as I said, look, it's had so many attempts to break out up over here. We've got a nice target, which is back down here, which is closing the gap. I wouldn't be surprised if this happens to get down over here at some stage. If we see some sort of resolution, it will sort of come back down over here. As I said, it should have sold down a little bit harder. Like obviously it did sort of come down a bit here. Where was it? It was just about here, I think. This is where the data came out. This 4-hour candle here. So it barely moved. Like it was already sort of selling down into it. We do have a gap up above here now as well though. So let's drag this up. Whoop. That's another gap for us here. Another little target for us. So really, the dollar has had so many attempts to sort of break out, and it just hasn't quite done it yet. Look, it's looking very weak through here as well. I do think that, again, should we see no progression, because remember, ceasefire was the talk, it was all positive, and what was happening? Was ceasefire happening? Big gap down. Progression, progression, progression. No, okay, bang, back up to the top side. Should we see no resolution again? So I wouldn't be surprised if we get a little bit of a higher move there. If we look at this on the daily, it's trying to hold three attempts to sort of get down through this level here. Kind of just Friday, no, it's Friday level there. So look, it's not looking pretty. I'll give you that much. But again, the knockback has sort of come back to this zone here. I think, look, if you do get down underneath 98.50, you're probably looking to close this gap down here. But I do expect to get a bit of a punch up early in Asia trade on Monday, given sort of the latest developments with everything going on. Aussie dollar did sort of have a nice big recovery sort of through here. This is another one that is sort of I got off quite well, sort of like through this move, later sort of move up over here. Based on the headlines, it actually held up a lot better than, as you can see, like sort of maybe gold did and that. I closed out all my sort of positions. I tried to get on the short side up here again. Didn't quite get there for me. I thought, look, let's go into the weekend a little bit flatter. So I'm out of Aussie at the moment. But again, I'm still looking for the downside. I'm still looking for this kind of touch up of this rising support down over here. Although it has been incredibly, incredibly resilient there. And I think that's about it for me just at the moment. Look, it's only just a very sort of quick one to sort of flick through the charts here, but get a feel for what's sort of happening in the week. As I said, the big thing is the ceasefire. CPI didn't give it the impact that we thought it would have for the dollar. It should have been sold off. It didn't get sold off. So I think that's just because the market's buying it up because they know that this ceasefire thing wasn't potentially going to hold, and it seems like they're correct. So again, I expect a bit of a continuation. So down to the downside to the Aussie, downside to the metals, silver and gold, and upside to US dollar coming through this week. All right, that's just a quick touch up from me. Actually, before we just do that, let's have a quick look at what data we do have coming up. Um, nothing interesting. Nothing interesting. We've got PPI coming out on Tuesday night. I am liking this new winter timetable with 10:30 for the bits of data that are coming up there. So PPI is the producer price index. Looking like a little bit of a push up over here, actually. This is a month on month. The core looks to be coming in flat, but this would be dollar positive should it come through as it is expected. A whole bunch of Fed speakers in that on Wednesday morning, Tuesday night. Before we haven't got much, got employment. Wow, they're losing faith over here. Even after 48.9 thousand, they always tip 20,000, and now they've just lost faith and they've gone to 17.9. Unemployment 4.3. This went up last time, quite a bit of a jump actually. 4.1. It's been 4.1 for a couple of months, up to 4.3. It'd be very interesting to see how this happens here. This will be something to watch actually for Thursday on Aussie dollar. Certainly weaker numbers, higher unemployment. That's more likely sort of probably weak side for Aussie there, certainly, because you can see that the jobs are not doing what they kind of want them to do. They want those unemployment rates down. They want the job employment change number up, to sort of show that it's a healthy economy. Because if they're going to hike rates, if they're going to hold them high for longer, what they kind of want to do is actually sort of force a bit of these numbers, but there's only so far they can force that. People sort of sit there and they're like, oh, what? They actually want us to lose jobs? Well, kind of yes, because they want less money in this system. They want less money floating around. If you've got less money to spend, in theory, then that's going to help sort of drive down inflation because you're buying things. So they need to then sort of stop raising the rates. But if you keep buying things and they put it up and you buy it, and they put it up and you buy it, well, that's what inflation is. So we'll have to sort of see how this sort of stuff plays out. But at the moment, that data is not looking good for Aussie. And again, you put that in line with other things going on in the world. If there's no progression with ceasefire talks, plus we're getting a sort of weaker looking economic data on the home front, I think CPI came in a little bit cooler last time as well. That's not looking so hot for the Aussie. Certainly, I don't see any major breakouts to the top side in Aussie in the sort of immediate future. I'd be looking for that medium term trend to the downside. The longer it takes, the higher that target will come, of course. But I think that's certainly a place that we can sort of be looking for. Moving through the rest of it, we've got Philly manufacturing, Boeing in employment claims around like two teens. Teens is kind of just nothingness and a bit of data, and that's about it. Okay, so yeah, so a bit of Aussie data out sort of through the week. We got PPI. They're really the highlights in terms of data for the moment. But really, data's the backseat. Watch out for those headlines of sort of like, hey, yeah, there's been a progression in the talks. The market's going to react. Is it actually true? Is it going to hold? That's what you've got to ask yourself when this data comes out. Because if it seems like, excuse me, legitimate, and hey, there is it, bang, we've got to hear it from the US as well. I suppose you got to hear it from Iran. Actually, you can't just say you got to hear it from the US because they tell you all the time we're doing great, but we got to hear it from both sides, and then we go, okay, maybe this thing's done. Maybe look for the other indicators. Look for sort of oil market just to absolutely bottom out. You get oil back into 80, that's probably a sign that this is over for the time being, anyway. 80 is still above where it was previously, but that's still going to be a 10, $20 drop off from wherever it is at the time. Oil's having a tough time holding above 100 again. Got up there pretty high and shit, but then it came right down. But the progression, the whole thing stalled, so it goes back up. It just goes around in circles like this. So yeah, the headlines, you've really got to sort of make that sort of snap decision as to is this actual progression, or is it just a fluff headline piece, which could be just an exit situation? So yeah. Anyway, that's just how we're going to take it this week. All right, that's it from me.